Bulls not going down without a fight. The Nifty's pulled back close around 80 points from the low point of the day. Adani Ports has pulled back. Dr. Reddy's as well as the other one that's pulled back just in the last 30 minutes or so. A couple of those stocks, they have tried to do a bit of a pullback. Even Ultratech Cement, I think, a bit of a pullback is what we've seen out there. And that's why we're back up close around 160 points out. Very, very volatile out there. From the broader markets, by the way, Alchem Laboratories is the stock that's really taken off in the last 30 minutes or so. But the one that's been doing well from the word go is Godrej Consumer. It's passing after their MD and CEO, spelled out the growth strategy for the company, also gave us a couple of guidance in terms of what their margin outlook could be. Well, Mangalam joins in to fill us in with all those details. Mangalam, over to you.
Well, Godrej Consumer is now, gaining once again after falling from the highs of today's trading session, and that's in line with the pullback that we're witnessing in the market. But what the street definitely liked was the brevity of the presentation of the new MD and CEO Sudhir Sitapati, and he did give measurable targets to the street to work with. What are the medium-term growth targets for the company? They're targeting double-digit underlying volume growth, and in that they will also see around 150 to 200 basis points EBITDA margin expansion. How do they plan to do it? Well, they will drive the category penetration, they will drive category expansion, and they will optimize the spends that the company will do in both capex as well as ad spends. And remember, this means that they will spend some more only to get much higher revenue. So far, that is a strategy that the company believed that they had been under investing in. However, all of that comes at a cost in the near term. The near term inflation headwinds as well as the weakness that we're seeing in the Indonesian business would impact their performance. In the second half in particular, they're looking at low volume growth and some compression on the margins, even as the price increase will support the revenues. In the FY23 sort of performance, they will see some moderate improvement on FY22 volumes. At the same time, we will see some moderate price growth and margins would stabilize a tad bit, see a wee bit of improvement, but that's primarily because the company will spend a little more on investments and advertisements. The street likes this vision. The street is awaiting the execution, but remember, the stock going into this was around 22% away from its record high, and as a result of this meeting and the outcome of that, we've seen some brokerage commentary coming in as well. UBS, we've had Jefferies as well as ICICI Direct. All of them have buy calls on the stock with targets in 4 digits, anywhere between 1,000 to 1190 rupees.
All right. Thanks a lot for that, Mangla. Mehrabun, what do you make of this stock? Management commentary pretty good. Brokerages like it. Stock down 22% from the recent peak. Your take?
As I mentioned earlier, I think pharma and consumption are two sectors where the downside of the stocks have possibly matured. I think I would definitely look at them from a buying angle. Very selective in pharma, I think, across the board and most of the FMCG names, because they have said 20-25%. Can you believe a Hindustan Lever is down 25% from its recent high? It is somewhere in the month of October, if I'm not mistaken. So I think this stock, if you believe in a 5% downside, I think could provide decent investment opportunities in the market in which nobody can make a call as to whether we are going to fall more or whether we will consolidate at around the present level. Coming to Godrej Consumer, I think I don't think in the last 10 years I would have seen any management change been looked at so positively by the market. I think the stock flew when this new person took over. And even today, post the presentation, I think most of us are quite positive on the stock. Whether I buy Godrej Consumer at the present valuation of somewhere around 55, 56 times 2022 earnings, or maybe a 48, 49 times, that's a matter of conjecture. Should I buy it? I think from an investment angle, I don't think I will go wrong. I will make money. But in a market scenario in which there could be possibly more downside than upside, at least in the near future, I will give it a pass for the moment, but certainly have it on my radar from buying it if the stock gives me an opportunity to be 5, 7, 8% lower from the present level.
Okay, Mehrabun, thank you very much. Great to have you with us here as always. Appreciate your time and good speaking with you. The market is doing just bouncing around, right? I mean, like an excited stock. That's what the index is doing. So it's quite incredible, the large moves that we are seeing at this point in time. I mean, whipsawing on both sides, down and then back up. Unless you have a large, decent sized stop, and if you're trading, of course, I mean, then you run the risk of getting stopped out in a market like this. I just sort of ran a quick screen to see where has been the maximum damage from the day's high across the F&O list of stocks. So just a few intradays will tell you the story. Idea, for example, is down about 5.5% from the day's high. I think 1480 or so was the high. It's now at about 14. Exide is the other one, which has come off. It's about 4% off the highs. There you go, that's Exide. There is Bank of Baroda, which has lost about 4% from the day's high. That's another one. Shriram Transport Finance, which has been a pretty poor performer all through their announcement. That's down about 3.8, 3.9% from the day's high. Strides started with a lot of excitement in the morning. That's lost 3.5% from the day's high. There is LIC Housing Finance, Bandhan Bank, Indiabulls Housing, India Mart, Canfin Homes, and so on and so forth. I mean, actually, a fair bit which is not doing all that well. On the other side of the spectrum, the stronger part of the market, Colgate-Palmolive, for example, right? I mean, basically, one of the names which is back at Feb 2020 levels, that's bouncing. It's up 2.25%. I mean, it's actually up pretty strongly. It's a decent, almost 3% move. Navin Fluoro is another one which comes up. Pfizer is another one. Piramal, IGL, these are names which are holding on to the day's highs as we speak. This is just the F&O list that I'm referring to. Varun Goyal is head of equity at Nippon India AIF. He's joining us right now to take us through what he's making of these market moves. Varun, great to have you here. Thank you very much. Prashant here. So, directionally, Varun, I mean, do you have a sort of call? Is there more downside in the market over a period of time? Or so would you be cautious, or would you start buying what you like? Yeah.
Good afternoon, Prashant. Thanks for having me on the show. I think the first half of the year was relatively simpler from a macroeconomic perspective. We were looking at a low base of last year. So we have seen, broadly, Nifty companies delivering a 30 to 35% kind of growth as far as H1 is concerned. Now, the H2 is the more trickier part because we already have a high base of last year because the economy had largely opened up in the third and the fourth quarter. So it'll be interesting to see what kind of results come up. I know in the next earnings season, Q3, Q4 are very critical to understand and to ensure that the earnings growth, which is kind of priced in by the market already, is actually certain or it is going to happen. Our own sense is while the year-on-year growth might be a little soft, we could still end up 25 to 30% growth for this financial year on a YOY basis. As far as markets are concerned, of course, a lot of growth is already priced in. We would rather stick to stocks and ideas where we believe quite confident about growth continuing to come by, where profit and sales growth trajectory is firmly in place. So those are the stories we continue to like. We believe export stories, be it IT, pharma, specialty chemicals, and some of the sectors which are dependent on the ancillary or the second round of export demand should do well in these times.
All right, Varun, good speaking to you. I'm looking at it, you're managing close to around 6 funds under the AIF. One of them is opened, I believe, till the end of this year as well. And you're talking about being stock specific. I'm looking at, all these funds, and Tata Motors DVR, that finds a mention in quite a few of them. So you're clearly playing on the fact that, this discount that is currently prevailing between Tata Motors DVR and Tata Motors stock should narrow. If you could give us some rationale out there to what levels it could narrow.
Good afternoon, Nigel. Without going into specific details of the name, I would just say I think India is set for a disruption in the passenger car space. We have seen very few players seem to be prepared for this transformation, and whichever companies already have some proven models, whichever companies have the ecosystem in place and are backed by good capital, should see tremendous growth. I think if you look at the data which is coming out in the last 1 year, to the exception of one or two names, most players have been losing market share. So we have to bet on the new technology. We have to bet on the players which are ready for the EV journey of the future, and that's where we would like to have our bets.
Got it. All right. 2021, it belonged to the IT pack. IT pack is up. I mean, the index on the whole is up 50%. The Nifty is up 20% approximately, but the Nifty Bank, well, that's up just around 11-12%. So it's been a bit of an underperformer. Could 2022 be the year for the banking space? Credit offtake, everyone's talking about, asset quality improvement, the economy is going to rebound. Then do you believe that 2022 will belong to the banking names?
Well, Nigel, our sense is IT sector is going to get even stronger. Just to share some numbers, IT exports out of India are around 110, 120 billion dollars odd today, and our sense is in the next 4 or 5 years we'll be looking at almost 200 billion dollars worth of IT exports. Just to put the number in perspective, the crude imports that India has are around 160, 170 billion dollars. So we are actually moving into an era and time where IT exports will take care of the whole crude import bill, and that has huge ramifications on the external sector, on the rupee, and on the interest rate scenario. So our sense is, as this huge IT capex cycle plays out globally, Indian companies should continue to benefit. We should see a lot of export earnings. We are already seeing significant pay hikes for IT professionals in India, and that will have a huge second-round impact on various discretionary sectors in India. As far as financial space is concerned, we believe, to the exception of Tier 1 players, most of the second tier lending names continue to struggle. We would see more and more consolidation. The top 4 or 5 players, be it a public or private sector, will continue to gain market share, and then the new age players, the digital players, will come in and snatch market share from the Tier 2 players. So we would tend to stay away from them and stick to the Tier 1 large banking players for now.
Any interest in names like, I was just noticing that move on something like a Colgate, Beckett, very steady business. I mean, won't do anything great or exciting, but 12 to 15% every year. I mean, like clockwork, and it's fallen quite a bit as well. Any thoughts?
Yeah, so Prashant, definitely some of the consumer names which were out of flavor for the last 1.5 years would probably do well in a turbulent time. Our sense is we would look at categories where the growth rate is a little higher than the nominal growth rate. So that is the scenario more in discretionary categories or in categories where there is a rapid premiumization. So yes, oral care is a space where there is quite a bit of premiumization. There is a lot of premiumization as far as the food space is concerned. So those are some of the interesting themes that one could look at.
What about cement, Varun? The month of November, out of nowhere, was a bit of a dampener. We had commentary coming in from a big name like Shree Cement. My checks as well on ground said that November was quite weak. Pricing has come off, demand is a little slow, and now we're getting into the end of the year when demand again is a bit soft. But what's your view on it? I'm looking at it, a couple of your funds, you'll hold a big chunk of JK Lakshmi Cement as a percentage of one of those funds. So you have some exposure to cement. So I ask you this, expecting a rebound in the fourth quarter?
Our sense is, as the real estate sector picks up, and we are quite positive on the revival of the urban residential real estate. I think the numbers that came out of the Mumbai registrations were quite promising. We are looking at a 10-year high in terms of registration. So our whole hypothesis of IT sector doing well, and then that having a big impact on the residential real estate space seems to be playing out. Our sense is, all the ancillary to the real estate sector, be it cement, be it tiles, be it sanitary ware, be it faucets, some of these companies, even the housing finance place, should do well. While cement seems to be going through a seasonal softness at this point of time, our sense is Q4 is when a lot of infrastructure projects get accelerated. We would see even the housing launches accelerating in the fourth quarter. So we would believe the cement demand should pick up and the sector as a whole should do well going forward.
All right, Varun, thanks so much for stopping by. You've given us your take on the index and a whole host of sectors as well. Wishing you well and enjoy the last 10 days of this year and all the best for 2022. Well, on that note, though, we'll slip into a short break with news that the markets are very, very volatile. But when you come back, we'll focus on CE Info as well as Map My India, as it is better known.